Hello everyone and welcome back to the closing summary. So here's how the markets performed today. Earlier than expected, speeding up of the policy tightening by US Federal Reserve pulled the indices down. Strong indications that the interest rates will increase in 2023 resulted in Nifty 50 falling below 15,700 and also extended profit booking in the domestic equities. Up close, Nifty 50 ended 0.48% lower, Sensex ended 0.3% lower, and Bank Nifty ended 1.14% lower. Weak global markets along with the monthly futures and options expiry led to a higher volatility in the market, and also huge selling pressures was witnessed in the metal, auto and banking stocks. IT and FMCG were the only gainers in today's sessions, restricting indices from a major fall. Nifty 50 June futures ended at a discount of 10.45 points to the spot index with a 0.3 rise in open interest. Asian markets ended on a mixed note today as well. However, some of them managed to recoup the intraday losses. China's Shanghai Composite gained 0.2%, closing at 3,525 points as subdued May factory output data from China eased investors' concerns that the Chinese central bank might not tighten the policy rates anytime sooner. On the gainers and losers front, Asian Paints, TCS, Tata Consumer, HDFC Life and Ultratech Cement are the top Nifty 50 gainers, while Adani Ports, Eicher Motors, IndusInd Bank, Tata Steel and Hindalco are the top losers. Speaking of stocks, most cement company shares gained today on expectations that the cement volumes is most likely to improve now that majority of the states have started relaxing the COVID-19 restrictions. Companies like ACC, Ambuja Cement, Ultratech Cement, Shree Cements, JK Lakshmi Cements and NCL Industries closed about 1 to 4% higher. BEML shares closed 3.5% higher, touching a 3-month high of 1,425 rupees after reports stated that an inter-ministerial group will be meeting up on Friday to discuss the strategic sale of stake in the company. Major corporate earning releases to watch for tomorrow: Ashoka Buildcon, Fertilizers and Chemicals Travancore, Insecticide India, Renuka Sugars, Timken and Tokyo Plast. On the technical side, the overall base trend of the market remains cautiously bullish and sectoral rotation can keep the indices in a range. The markets managing to hold above the key support levels despite the major negative global event is a clear indication that the bulls are not ready to give in yet. Support levels for Nifty 50 is placed at 15,550 to 15,630 and resistance is placed at 15,750 to 15,800 levels. Bank Nifty is continuously failing to give a clear bullish setup, and the final support levels for Bank Nifty is placed at 34,180 and resistance is placed at 34,800 to 35,100 levels. Our advice to the low-risk investors remain the same. Keep distance from the market for the time being, increase the cash holdings, avoid any risky bets, and wait for a healthy 3 to 5% correction in the indices to enter. Before we leave, the markets will be keeping a close watch on cues from the release of the minutes of meeting of RBI MPC meetings, which was held between June 2nd and 4th. That is it for today, guys. Thank you so much. Stay home and stay safe. Do like and share our videos. Follow us for regular updates like these, and also leave your comments below on what are your thoughts of today's session. Thank you. Namaste.